Hi guys, welcome. Skyworks Solutions has just released its latest quarterly reports for Q2 of 2021. Revenue is up 53% year on year and earnings per share is up 84%. And yet, the stock price tanked heavily on the earnings date, same as what happened to Qualcomm. Look at this massive drop here. In this video on Skyworks Solutions stock analysis, I'm going to dive into the financials and the technical charts to see whether is Skyworks Solutions worth investing in, is it a buy or a sell at the current price, and whether Skyworks Solutions is trending up or down from the technical charts. So, let's jump into it. The revenue has been on a solid growth path since 2018 from $913 million to $1.1 billion in the most recent quarter. The year-over-year revenue growth is a high 52%. The number is huge because the base that it is calculated from is a low of $766 million achieved in Q1 of 2020 compared to the current Q1 revenue of $1.1 billion. In comparison, the quarter-over-quarter change is a negative 29%. The projected outlook for the next quarter is $1 billion. That will result in a year-over-year growth of 36% and quarter-over-quarter change of negative 15%. So, while the year-over-year revenue growth is high, the revenue is in fact on the way down. The gross margin has been averaging around 49%. The gross margin did not spike up in the similar fashion as the revenue or gross margin. It just went up slightly from 45%. I did not find anything unusual in the income statement. The total operating expenses as expected has also grown with the revenue. The rise is mainly for R&D and marketing and general admin. After taking away the operating expenses, Skyworks Solutions net income came at $325 million and is in line with the operating income. The increase in profitability is evident in the net margin, that is seeing it holding steady above the average of 26.75%. The earnings per share has also spiked up and came down in the most recent quarter to 1.95. The trailing earnings per share of the last 4 quarters is a solid 7.24. Let's take a look at the cash flow report starting with the operating activities. Looking at the trend, Skyworks Solutions cash flow has improved dramatically in the most recent quarters. There is a constant cash outflow in investing activities. It is primarily due to the investment in property, plant and equipment. The free cash flow is also increasing and there is a nice bump up in the most recent quarter. This is the clearest confirmation of Skyworks Solutions profitability. Free cash flow is operating income minus the investment in property, plants and equipment, or also called capital expenditures. It is an indication of the real earned income after investing in continued operations in the business. Skyworks Solutions has very good stock repurchase plan, but they did not buy back any shares in the most recent quarter. Maybe there is also another reason why the stock price tanked, as it was not supported with the buyback program. Skyworks Solutions has a good dividend policy as well. These are the two main items contributing to the constant cash outflow in financing activities. Skyworks Solutions' cash position is healthy and stable. The cash position has further strengthened in the most recent quarter. The quick ratio has jumped to 2. Overall, Skyworks Solutions' balance sheet is steady with high total assets and low liabilities. Besides cash, the main components of the total assets is property, plant and equipment at $1.4 billion. Goodwill and intangible assets accounts for $1.2 billion and inventory at $740 million. Skyworks Solutions does not have any debts. It is a debt-free company. The book value per share has been rising rapidly and is at $30. The book value measures the net asset value, which is total assets minus the total liabilities on a per share basis. Skyworks Solutions is trading at a multiple of 6 times price to book. That is just slightly above 5. Usually, value investors look for a multiple of below 5. Due to the rapid rise in year-over-year revenue, the PE to growth ratio is a low 0.7, meaning that the share price has not appreciated at the same rate as the growth in revenue. The PEG ratio measures the PE in terms of revenue growth in comparison with the same quarter from the previous year. It is used to value the stock price based on revenue growth. A value below 1 but above 0 is a value buy. Let's take a look at the technical analysis. Here's the big drop right after earnings report. This is a real drop with high volume and gap down. Usually stocks will take some time to recover from such a big drop. It looks like big players have left the party. There is good support at around 160. This support is holding for now, but I think any recovery from here will be short-lived. I'm expecting a short bounce from this level before price continues to head lower. The next support is at 135, where I think price could head to in the coming weeks. So, is Skyworks Solutions worth investing in? It is a profitable technology stock and is growing rapidly. Is it worth it at current prices? The valuation of 6 price to book is enticing. The PEG ratio is below 1 and the PE ratio is at 25, which is decent for a growing tech stock. Technically, while the overall trend is still up, the price is in a correction. Skyworks Solutions is a buy for me for the longer term, but is moderately overvalued at current prices. I would wait for it at 135. In the next video, I will be doing a side-by-side comparison of Skyworks Solutions and Qualcomm similar to the one I did for the 5G stocks to see which is the better stock to buy. Subscribe to my channel if you have found this sharing useful and hit the notification bell so that you don't miss out on any of my future videos. And I'll see you soon in the Skyworks Solutions vs Qualcomm video.